Hello, everyone, and thank you for joining us today for our webinar on Economic Substance Solutions. I will pass you over to my colleague, Connie Wong. Thank you, Connie.
Thank you, Ali, and hello and welcome, everyone. Thank you for joining us this morning. My name is Connie Wong. I am the Executive Director of Waystone based in Singapore. Waystone has over 20 years of experience in providing governance and compliance solutions to asset managers. Today's webinar, we're going to cover Cayman Economic Substance. I'm very happy and delighted to have my colleagues Niall and Dara joining us this morning from our Cayman office. Niall is our Executive Director based in the Cayman Islands. He heads up our Cayman Market Access Solution, which provides hosted management company and economic substance solutions to fund operators and sponsors. Dara is one of our independent directors. He works very closely with Niall in implementing our economic substance solutions and overseeing the risk reporting. Before turning to Niall and Dara, a quick housekeeping rules. There's a chatter box where you can send us comments and questions anytime during the webinar. We'll have some time toward the end to address some of the questions. So without further ado, Niall and Dara, I know you both have worked with a lot of managers in helping them satisfy the ES test. So would you share with us, your experience and some of the key areas that managers need to take note of?
Yeah, certainly. Thanks, Connie. So I suppose what would be a good idea here is I'll quickly recap on what the core income generating activities are. So this is what the regulator looks for when with regard to satisfying the economic substance test. So briefly on screen, you'll see here the three main elements. So firstly, there's the decision making, taking decisions on the holding and selling of investments, calculation of risk and reserves, taking decisions on currency or interest fluctuations and hedging, or preparing reports or returns, or both to investors or SEMA. And it also looks for the entity to be directed and managed in the Cayman Islands, which is your provision of at least 2 independent directors based in the Cayman Islands. So the majority and quorum of meetings are held in Cayman, and then ensure it has adequate operating expenditure, presence, or personnel in the Cayman Islands. So most managers haven't relocated to Cayman, so they look for an outsourced solution, of which Waystone can help with. So we've received a number of questions and inquiries from clients with recent announcement of partnerships being brought into scope for economic substance. From the 30th of June 2021, partnerships are considered relevant entities under the ES Act and must file an annual notification. The good news is that funds remain out of scope of the ES Act, and as such, funds which are structured using a partnership structure will remain out of scope. The ES notification is a relatively straightforward return and is typically filed by the registered office at the beginning of each year. Regulatory fines, that's always very topical. Most fund managers are now in their second year of operating under the ES Act. The fines for non-compliance remain the same at 10,000 CI in year 1 and 100,000 in year 2. While the fine is relatively small in the first year, it greatly increases in year 2. Subsequent non-compliance can lead to the authority seizing control of the entity and its assets. There are also reputational risks to consider, such as due diligence. Potential investors may see this as a red flag and prevent investment. The next question I'm always asked is how many fines have been issued so far? And the answer is I'm not sure, and perhaps none. Most investment managers were brought into scope for the first time in 2020, and the first deadline for the 2020 period is not due to 12 months after the period end. Many IMs have likely not filed their returns yet. Linked to the regulatory fines, something that is quite topical at the moment is SEMA, or the AML inspections. As of February, the Cayman Islands has been grey listed by the Financial Action Task Force, citing weaknesses in the island's AML or CFT regime, particularly in the areas of fines and enforcement actions. As a result, the regulator is conducting a huge number of inspections. Financial services companies are being inspected, with fines being issued to a number of large companies on the islands, one totaling $5 million US, or just over 5 million. There's another one in court at the moment, which is being disputed, but that's rumored to be over double that, so around 10 million. For investment management entities, there's no difference. There are currently 80 active inspections, and fines, depending on the severity of the breach, will definitely be issued. Historically, SEMA would conduct an inspection, issue their findings and return in 6 to 12 months to review the remediation of items. With the grey listing, we don't know if this will still be the case when they're eager to be removed from the grey list and show the FATF that they are a strict regulator. The fines can also add up. They issue fines for each occurrence of a breach. If, for example, you had KYC on file that was not certified in a suitable manner for CIMA, they could issue a fine for each client which was not properly certified. At this point in time, I'm not aware of any inspections on the underlying funds, and this is typically a lower risk area given independent administrators are appointed who have global policies and standards in place. IM entities would be viewed as self-administered with policies varying from firm to firm. CIMA has also issued their findings that internal appointments for the AML officers would likely be conflicted and not independent. One item that is quite topical as well. We've received a number of queries from clients about the annual returns and how they are to be completed. So I'll break it down into the two returns. So one is the economic substance notification, and this is relatively straightforward. Your registered office would have reached out at the beginning of the year. There's some static data and a confirmation if you were carrying out a relevant activity, and this is a precursor to the actual return. Once the ES notification is filed, noting the entity in scope, the DITC, which is the Department of International Tax Compliance authority here in Cayman, they expect to receive the annual return. So the second return is the annual return. It's a very detailed return, which is filed on the DITC portal, and that's the same portal where FATCA and CRS returns are filed, which some of you may be familiar with. The authority looks for a wide range of information on the activities, such as number of staff or outsourced services, hours spent on an annual basis, evidence of timesheets, operational expenditure incurred in Cayman, operational expenditure incurred outside of Cayman, and a copy of the investment manager's financial accounts. With regard to the operational expenditure, one of the metrics they will use to gauge compliance is comparing your operational expenditure to your peers. I also mentioned the annual financial accounts. These typically won't be your audited financial statements, so there's no requirement to have them audited, but it will be your income statement and your balance sheet for the period. I'll turn it over to my colleague Dara, who is going to give a quick overview of what the Waystone solution is.
Thanks, Niall. So at Waystone, we offer a comprehensive range of services that allow relevant activities to conduct one or more relevant activities in a way that is compliant with the Economic Substance Act that Niall mentioned. Our Economic Substance solution has been designed to mirror that of the core income generating activities, or as it's frequently referred to as CIGA. So these are being directed and managed in the Cayman Islands by the provision of independent directors, the majority of which will be based in the Cayman Islands on a full-time basis. The second is independent risk reporting, which we produce in line with AFMD standards and deliver in line with the frequency of NAV calculation, i.e. if the client is delivering it on a monthly or a quarterly basis as applicable. The risk reporting typically looks at value at risk, or VAR, stress tests, concentration limits, liquidity, leverage, and any offering document restrictions which have been imposed. The third and fourth elements of CIGA are grouped together as FX hedging, be it at a portfolio or share class level, and portfolio management and ongoing oversight as the fourth element. We work with advisors and conduct periodic meetings with the advisor, coupled with the detailed risk reporting to ensure the portfolio is being managed to its stated objectives and agreed terms. Lastly, our service offering also includes the preparation, completion, and filing of the annual economic substance return with the Cayman Department of International Tax Cooperation, and the provision of dedicated personnel and resources in our Cayman Islands office.
Thank you, Dara. I think that's a very comprehensive, walkthrough of our solutions to managers who might be looking for, in satisfying some of the yes requirement. And I do have some very interesting questions coming in, and I think perhaps I can pick a few. One of that, which they are asking, I know, Niall, you also mentioned earlier, under the topic of the regulatory fines, we don't know exactly the amounts or whether if the regulator has imposed that fine. This question is kind of irrelevant to that. They are asking how many civil or investment entities have closed since the implementation of ES law?
Yeah, good question. I don't have the full numbers, so the regulator here releases statistics on an annual basis. I know a number of the smaller entities have closed, so it's really each manager would have had to do a cost analysis to see if it was worthwhile maintaining the entity. If you had assets around 5, 10, 15, $20 million, the tax benefit that you would receive on having a Cayman investment manager would not be worth it. So the cost to compliance would outweigh the benefits. Once managers get to 50, 60 million AUM plus, well, then there's definitely a benefit to maintaining the investment manager. But I don't have the exact figures of the number of entities that have terminated or restructured, but there certainly has been a number of the smaller ones which have closed.
Thank you, Niall. And I do agree with you, when the managers, when they look into whether to restructure, there's of course some of the benefits they can enjoy, and having a cost benefit analysis is very important, and to look into the viability of having the different structure in place, and of course, the flexibility which maybe potentially the Cayman manager can offer to some of the internal considerations manager are thinking. The next question I have here is, I also often being asked is, this manager is asking, I have a Cayman-based director, will this enough to satisfy the ES test?
Yeah, so there's a requirement for each civil entity to have at least 2 directors. What we see is they look for the majority and quorum of directors to be in Cayman. So if you have 1 director based in Hong Kong and 1 director based in Cayman, well, then the director in Cayman, it's not sufficient to call a quorum for the meeting, and the majority of the directors aren't in Cayman. So the typical composition is having 2 Cayman-based directors and 1 onshore director, and depending on the jurisdiction, they may not wish to have an onshore director for tax purposes. So it's typically 2 Cayman-based directors.
Okay, thank you, Niall. And I know you earlier, you also give us a recap of the SIGA, which I know it kind of also expand in addition to the board of directors that we have to engage or appointed in Cayman. Were there any other components you would suggest here to managers in order to helping them to satisfy yes tests in addition to appoint the director?
Yeah, so it varies from structure and strategy, let's say. If you're a private equity fund or fund of fund or venture capital fund, the directors alone will be quite involved in the investment approval and decision making on an ongoing basis. If you look at an equity long short that's more actively managed and traded, it's a little bit different. So the additional items and core income generating activities are what Dara touched on also. So the ongoing portfolio management element and the risk reporting element, where we look at the VAR, stress testing, etc. And we look at that on an ongoing basis. And then, yeah, if it's a private equity structure, where there's only going to be 10 or 12 transactions during the life of the life of the fund, directors alone can satisfy the core income generating activities.
This is very helpful to know, the managers themselves, they should look into the type of strategies they're deploying or employing to determine, to what extent the economic substance requirement that they are subject to. So that's good to know. And I have the last 2 questions. I think I would pick that too, given that it's quite an interesting one. The second last question I have here is, this manager is asking, I have heard a physical office is required to satisfy the ES test. Is that true?
No. No, that's not true. So there's two options, or there's two solutions. One is, the physical relocation and having premises in Cayman. And I am aware of a couple of managers who have moved with the physical office presence in Cayman, but there is not a requirement to do so. You can also use an OSP, that's the abbreviated term, or it's outsourced service provider. So you can use an outsourced service provider in Cayman to discharge the core income generating activities on your behalf.
Okay, good to know. Thank you. And the last question I have, and I think I have been also getting the same questions from a lot of managers in Asia. So this question, the manager is asking, I have heard of using a BVI-based manager to a Cayman fund. Can you provide some further details of this? So now if you can share with us, I know you have been working with a lot of managers around the globe across different type of structure and also strategies. So if you can share with us your insight on this one, that will be good for the audience today.
Yeah, good question, Connie. I am aware of a number of managers who had looked at restructuring and using BVI as a jurisdiction. I think BVI typically didn't have the same infrastructure from a fund perspective historically. Having said that, though, BVI has about 500,000 companies incorporated versus about 120,000 companies in Cayman. Typically, those companies in BVI would be for property or single assets, and it is quite efficient as a simple structure. Historically, for investment managers, BVI wasn't a very common jurisdiction. I serve as a director on a number of BVI funds, and they were historical funds, let's say. A lot of the times, from a structuring perspective, while BVI is known for companies, it's not as popular for investment funds and investment managers. A lot of the times people will ask, well, why BVI for your fund? Investors aren't as familiar with BVI. So I think in the instance that the question that you had here is, having a Cayman fund and a BVI-based investment manager, I think some have moved, and there is certainly a benefit, or some people see it as a benefit, in that they have I think it's a $400 million. So if you're managing less than $400 million, well, then the economic substance test does not apply. One thing to consider there is it may be cheaper not to comply with the economic substance test, but you'll have to pay a number of fees to restructure and redomicile. Many clients may not be happy with the use of a BVI, or some investors may not be happy with the use of BVI as the investment manager, given it's less regulated and less well known than Cayman. And then also, I think the economic substance law was as a result of pressure from the OECD in Europe. Each country that has wrote into law has implemented it slightly differently. So I think Cayman and the Channel Islands, etc., had a similar viewpoint with the implementation and the drafting of it into law. BVI has taken, let's say, a slightly reduced test. So it may be that after entities restructure, that we've seen, in 1.5 years, when the first returns are applied, well, then the OECD may not be happy with the implementation by the BVI. So that's also an item which may lead further tightening of restrictions in BVI to mirror that of Cayman or the Channel Islands, etc., in the future. So I think it's a bit of a wait and see with BVI. They haven't implemented the economic substance law as other countries have. So you could run the risk of redomiciling only to have to redomicile back to Cayman in a year or so, and then pay twice the fees for restructuring. So I think it's a bit of a wait and see on BVI as a jurisdiction.
And that's good to know, some of the considerations that a manager need to put in place when they decide the type of entity they wanted to set up. So that's good. And maybe just to wrap it up, and the last question from me is on the annual return. It can be either to Dara and Niall, either of you, if you can remind us again, what is the upcoming deadline for the year's return, and to what period that the return is covering. I think a lot of the managers got confused with the day, so it'd be good to have a reminder here just to before we wrap up this session.
Yeah, certainly. So most managers, the first year they would have been in scope. If the entity was in existence for a number of years, the first year they would have been in scope would have been 2020. And assuming 31st of December year end, they have within 12 months to file the return. So the detailed return will be filed by the end of December this year. So the 2020 financial year will be filed before the end of 2021.
Okay, thank you, Niall. And I guess just to recap, you know, that Niall and Dara, they have each of them have shared, give us an overview of each of the SIGA components and what are the topical what are the topical items that we came across often. And of course, Dara has shared a full solutions that Waystone can offer. And I know we have other questions we didn't get a chance to address this morning, but we will reach out as usual to each of you to address those questions individually, and also sharing this webinar recording and presentation slides to all of you. And thank you, Niall, and also Dara, for your evening time joining us. I know it's the evening your time, so it's really appreciated for your sharing and also input. And I wish the rest of you guys who dialed in this morning have a good rest of the day. Thank you.
Thank you.
Thanks, Connie.